Today, we're going to talk about the real deal on credit scores, credit history, and what you need to know when you're buying a house. If you're new to the channel, I'm a mortgage lender. I've been one for 18 years. My team's licensed in 50 states. We're one of the top purchase teams in America. This is what we live and breathe every single day. I wanted to do this video about credit because it is one of the most misunderstood things. And I'm going to be honest, there's been a lot of marketing targeted at you, the consumer, about credit for the last decade. And it's that marketing that is creating a lot of fear about credit. So first, let's talk about credit scores. Look, as a lender, a credit score is important. Sure, it depends on the loan. Is it going to change whether you qualify if you're a 700 versus 710? No. Is it going to change if you qualify if you're a 620 versus a 700? No. Will it affect your interest rate? Yes, depending on the loan type. For instance, if your credit score is 700 or even 600 and you're working with me on a VA loan, rate's going to be the same. Okay? FHA, you don't see big swings on credit score either. Conventional, you do see adjustments, but it's not as dramatic as it's been made out to be. So who's marketing this to you? Credit bureaus. That's right. Come on, let's think about it. If you're Gen X, right? I know, no one talks about you guys. I'm part of that forgotten generation. But here's the thing, guys. Do you remember no one used to talk about credit scores, but now it's like Experian wants me to pay for a service, Equifax wants me to pay for a service, TransUnion wants me to pay for a service. They're sending me these emails, you got to get your score to this, you got to get your score to that. It's like this weird world has opened up of like score, protect the score, do this, do that. Yes, you should be responsible with your credit, okay? However, a lot of this hype around credit scores is to sell services, okay? So look, the bureaus, the more obsessed you become with your score, the more products they can sell you. That's number one. Number two, the bureaus have two different types of credit pulls. Once upon a time, it used to just be a hard credit pull. So when you applied for a mortgage, we would immediately do a hard credit pull, okay? You can't close a loan without one, guys. That's what I need to close a loan. And there's certain loans like VA and FHA where I need that to see if you even qualify, okay? But there's been all this marketing and hype that's like, don't let anyone do a hard credit pull. Don't do it. Guys, if you're gonna buy a house and you plan to buy a house within the next 120 days, do the hard pull. Do it. Get it over with, okay? And people go, but I just want the soft pull. Guys, the bureaus, so here's what's going on. You need the backstory to understand the ridiculousness of this situation. So we used to do just hard credit pulls, and the bureaus sell your information to other lenders, no joke, when we did a hard credit pull. And lenders were like, can you stop selling our clients' information? They didn't consent to this. You've got all these sleaze buckets calling them now. And they were like, well, we do that so that consumers have the ability to shop. Yeah, you know what's weird though about that? My clients with lower loan amounts, they don't get as many calls as my clients with higher loan amounts. So I guess it's just for people who are already affluent to get the option to shop, right? Okay, I know that was snarky, but it's true. It's just ridiculous. And it's because lenders can pick, the buckets of loan sizes they're buying when they're buying this from the credit bureaus. Anyways, so the lenders complain and they go, okay, we'll do a soft credit pull. That way you can see if your buyer qualifies and we won't sell their information until you do the hard pull. And it's like $4. It was cheap. It was super cheap when they started. So lenders start doing soft pulls when they're doing pre-qualifications. There's all this marketing and news articles about why you should do a soft pull because the lenders don't really want to do a hard pull until they have to because they don't want all these people calling you because they're scared. They're like, oh my God, I'm going to lose the client. Whereas I'm like, if I lose a client because some random person called them and said that divine intervention told them to call, I didn't do a very good job educating my client, right? Okay, so the industry is pushing soft pulls. You guys as consumers are being told, don't do that hard pull. It's scary. It could hurt your score. Do the soft pull. Okay, now, soft pulls do not affect your credit scores. Hard pulls can. Now, if for instance, and this is what I always tell people, a hard pull on your credit, what you don't want to do is you don't want to like call me in June and then call Rocket in July and someone else in August and do hard pulls like every 30 days. That's going to hurt your score. But you are allowed to call a couple different lenders and have a couple different lenders do a hard pull within a 30 to 45 day window. They say 45 days. I'm paranoid. I would do it within a 30-day window. Okay? Look, do you need all these lenders to do hard pulls of your credit to get qualified? No, I would be picking one lender that will do a fully underwritten pre-approval. I would get that. And if you want to shop, great. Like, I'll tell you your credit score, but at least shop correctly. You don't need everybody pulling credit. And that's one of the big issues too, is people are like, well, I'm going to shop, so I have 12 lenders pulling my credit today. I want you to pull it today. And I'm like, I don't want to be one of 12. Like, it's expensive to pull credit, right? And it doesn't make sense. It's like, look, if you want to shop us, the day you're in contract, just tell me your score. I'll tell you where I am. And if you're like, well, I can't trust that. Okay, I'm not the right lender for you. Like, great, go work with the lenders that you can barely trust so that you get these loan estimates that most of the time buyers don't even know they're locked. Anyways, I digress. So, hard credit pulls are the only way you can close a loan. I fully underwrite my pre-approvals. The reason I do this is because it's the strongest pre-approval it is. You're saying to a buyer, you're saying to a seller, I already did all my homework. You know, if there's two offers that are similar, the fully underwritten pre-approval could be what wins the deal and it doesn't cost you money. Yes, I'm going to do a hard credit pull. I am. And is it gonna lower your score? No, I don't see it generally lower dramatically. Like your score could go down a couple points, right? I've never seen it be like a 40-point drop or anything like that. You know, and sometimes people will be like, I got an alert that my score went down. Guys, we're all getting nonsense alerts every single day. Like I get an alert that's like, your score went up, your score went down, your score went up. Your score is not actually really moving that much. It's just the bureau's trying to get you to click back in or your credit card to get you to click back in, okay? Really important that you recognize that. So with the soft pull, if you're like, well, Jen, why don't you just do, you know, fully underwritten pre-approvals with the soft pull, then I don't have to worry about my score. I can't close a loan with it, guys. I can't close a loan. It's not a real fully underwritten approval unless I've done everything that I can, you know, to make sure there's no variance. Do I trust soft pulls? Not for most people. No, especially on lower credit scores, I hate soft pulls because a soft pull, and this is what you guys need to know, you could be working with a lender where they say, oh, your credit score is too low for the loan. Did they do a soft pull or a hard pull? Did they do one bureau or three bureaus? What did they do? Because sometimes with soft pulls, I'll see like, oh my God, that score is so low. But then I do a hard pull and I'm like, oh, that was the lowest score. It's actually 50 points higher, right? They're not perfect. They're not usable. They're just something the credit bureaus created to tell lenders that they wouldn't sell your data, okay? Now here's the funny part. The cost of a soft pull is now as expensive as a hard pull. So like any good drug dealer would do, they gave it to lenders for cheap to start. When lenders pushed it out to the consumer that you guys should be doing soft pulls and not hard pulls, right? And they got everybody addicted to soft pulls, they jacked up the price, which makes it so that your overall price when you're buying a house is more expensive because of all these darn credit reports, okay? So look, here's what you need to know. If you want to buy a house within the next 120 days, bite the bullet, get the hard pull. The soft pull nonsense, like look, will I do an FHA or VA pre-approval with a soft pull? No, I don't even want to do it on a conventional, okay? And I've had friends who've done soft pull pre-approvals on conventional deals and the deal's gone sideways because the soft pull missed something. I don't know. I don't want to mess with your money over maybe 3 points, 5 points to your score. It's not a big enough deal. And a lot of times it doesn't even hit your score to do the hard pull and it's inevitable. embrace the inevitability. Let us do a fully underwritten pre-approval. Let us make this stress-free for you. And just understand all this hype about soft pulls, hard pulls, credit scores, drama. It's all so they can sell more products to you and to me. So thank you for watching. Questions, comments, as always, feel free to reach out to my team, 786-933-2077. Thanks for watching, guys.